Hey guys, good morning. I hope you had a great evening, great morning so far. Let's just wait a couple more minutes so people join in and then we'll start the session. Probably not a lot of folks uh, trading or even looking at the market with recent action and the fact that it's Friday. I will personally be on the road today. I will just make an announcement right away. I will not be trading. I think that's obvious. But I will not be in office today, so we'll be on the phone if there's any need. All right. So let's get started. People will continue to join in, and once again, the recording will be available anyway if they want to rewatch. All right. So yeah, that will be a quick one. Um, Not much to say, to be honest, but let's have good discipline and continue with sorry and let's continue with the good discipline and doing our routine each morning despite the trend being down. All right, so first thing first, QQQE. That was a nasty bar yesterday. So we had that gap up right above that base structure. Uh, we ran up a bit after the morning, after the open, but quickly found resistance right into the 21 DMA structure and sliced through the base structure, sliced through the most recent low. That I don't know if you remember yesterday's session, but my mindset was let's be in observation. Let's see if we can build that right side. Let's see if we can at least do some type of higher low on the right side to build up that market the proper way. And Brett was already oversold, so that was kind of my scenario to watch in the next few days and weeks. But unfortunately, uh, Nvidia faded its gap as well, and the whole market just slid down and undercut the most recent low. So we're back in price discovery. We don't have any meaningful low being made. So we're much further into potential constructive action based only on structure, based on what I want to see on the from the market on the right side and around the 21 DMA structure. And we're what? We're 3 times ATR, 2.75 ATR below the 21 DMA. So that's a huge move of like 3-4% needed to just retest that structure. So obviously today there's absolutely nothing to do for me for my style, uh, and probably all of next week as well. I don't know, trying to project a bit what kind of of move we could see from here. Obviously, the path of least resistance is down, but let's assume that we stabilize around here. We're still right into that structure from August, right? So I don't know what will happen, but if we stabilize, if we try to form another low here, by the time that the 21 day structure catches up, that we tighten up, that we need time to build potentially a higher low or some range on the right side before the reclaim. Uh, I really don't expect to trade all of next week as well. Uh, but we never know, right? Maybe we'll be surprised. Either way, either that the market just continue lower, and we see internals spiking much. So let's look at the internals. Speaking about them, so credit spreads, that's my risk on off kind of larger indicator, and usually those spikes gives the market that we need to make easy money, right? So October 2023, big spike. Then we had that end of the year massive rally. I don't know if you remember. Then we had that spike in April 2024, that nice trend after that spike in August 2024, and that summer was amazing. That spike in December 2024, small uptrend right after that. Then big spike early this year and going into April with the tariff situation. Then that April's rally that went on for many months. And that's where the big opportunity comes from. When you get those spikes, when you get those flush, those stress tests in the market. Um, and right now, we're not spiking. We're just building base above a rising 21 day structure, a bit like we did prior to April's spike. Um, and yeah, recently it was kind of very clean, but you get other instance where uh, you get those uptrends instead of having those spikes. So, and you don't get much cleaner trend. It was bear market 2022, so probably not a good example. Let's go back. So yeah, in a bull market, you get those spikes, downtrend, spikes, downtrend, spikes, downtrend, spikes, downtrend, spikes, downtrend. And when you start to kind of build above the rising 21 DMA structure, that's kind of concerning of what might happen. I don't want to call for a bear market. I don't want to call for the black swan event that you hear on X. That's not what I'm saying. I'm simply observing that based on the credit spreads and the way they are building right now, we don't have that spike and breakdown of the 21 DMA structure like we usually do have in a pullback, right? We're more in the weakening of the market, the risk of kind of base building before a potential move higher. And that move higher is exactly what we need to fuel the next uptrend. So when I wrote yesterday about the fact that it's freaking exciting that the market is weak and we get that weakness and maybe flush, I don't know. But that flush and that reset of the market will give us the easy money and the big beautiful trend that we make money with. So embrace it. We're in cash. We have nothing to worry about. We're there observing, gathering all the information like the internals. like the price action, like Brett. So let's look at Brett quickly. Just before VIX. So VIX have that same look as the credit spreads. We have that multi-mount base. We have that failed breakout, and reclaim yesterday, right? So what do we need? Maybe that's that kind of spike, like in April. If we do that and then we broke down below that base, that's actually very constructive. But just as in the credit spreads, uh, we need that spike on the VIX to eventually set up the market. Um, yeah, and Bitcoin was a big tell as well. Um, it was weak, big downtrend. We're almost accelerating to the downside as well. Um, and yeah, there's no support in sight yet. We're still well in place below the declining 21-day mid structure, and there's nothing to do there. And we talked about that yesterday. That's another clear red flag about risk off, right? Um, yeah, that's about it. We have a small gap up this morning due to Fed Williams, which said that he expect that the rate cut in December is not totally out of the picture. So market like that, but obviously this is simply kind of an oversold bounce in a downtrend so far. So Pato, I have a question about the VIX. Let's do that right away. So if tariff tantrum peak was 60, shouldn't we expect a much lower VIX spike? No idea, mate. I don't know where the VIX will go. I don't know where do we need. I think that we went into April's kind of flush and climatic move with that 60 spike, right? Uh, it just proves that right now we don't have the same type of panic and climatic action that is needed. Um, we can spike in the 60, 70, 80. Um, we saw 85 in COVID. But I don't want to lock myself into VIX need to spike to those levels. Uh, when we'll see, and again, that's my system, right? Uh, I don't want to lock myself into the fact that if the VIX didn't spike, then the market cannot go into an uptrend, right? Uh, that's kind of a nice confirmation. But if we start to get price acting constructively around and above the 21-day structure, if we get liquid leaders acting right, if we get Brett turning the corner from oversold readings that we'll cover in a bit, if we start to get Bitcoin setting up nicely as well, then we'll engage, right? So VIX spike and credit spread spikes are often needed, and that's a nice confirmation. But for me, that's second tier indicators, right? Give me just 1 minute, guys. I'm back. All right, guys. Yeah, there's a question about shorting, uh, and yeah, unless that we go into kind of 2022 bear market, um, and all that, then I'm not looking into shorting, right? Yes, I did in the past, but that's something that I want to stop, and that's what I explain in the git book. Um, I did short a bit in February and April, but that's something that I explain, and maybe I will add to Gitbook, right? Uh, I don't want to short with individual stocks anymore. That's what draining a lot of mental capital and creates that mindset and that process where you need to manage exposure just like you do for the upside, right? Um, what I want to do once we have, and it's not fully defined, right, guys? That's a map. That's how to say that. That's some structure to my trading, but I don't have a rule that okay, if the market is in a downtrend for 35 days and down 15%, then I allow myself to short. It will always be some part of feeling, right? So if the market rallies and the liquid leaders are still acting weak and all that, then that will be a decision call that I make to look at some tactical short. And like I said, that won't be through individual names. That will be through futures. That will be using NQ futures. And I did some small shorting during that downtrend, especially right here. I remember. And when you get into a prolonged downtrend and you get that weak action on the right side and we didn't flush, we didn't climax, the market was still continue to be super weak, then I allow myself to just make tactical short using futures. But then when I'm out, I'm out. I don't have that mindset tool to manage my exposure. I have one position. I trim it down, leave a small runner, and it's just to help my drawdown a bit, help my equity curve. But I'm not seeing that type of trading as what I will make myself push into new highs and really move my equity curve. That's mainly some small trades that I'm not obligated to make. That's mostly to stay engaged. But again, no individual stocks. All right. We talked enough about that. What I wanted to show is TradersLab. So something to consider, guys. This right here, right? So this is normalized McClellan summation. Um, we can always go lower, right? That's important to understand. But the McClellan oscillator is getting deeply oversold, now below two standard deviation below the average. And the McClellan summation is approaching that kind of oversold level as well at minus 1.6 standard deviation. So, um, if we kind of flush and we get that VIX spike and credit spread spike, in the next few days, and that goes kind of in the 2 standard deviation range, and that goes in the 2.5 to 3 standard deviation below the average. Then we have ourselves a pretty solid setup, uh, much interesting setup actually. And again, we'll start to look for constructive action, how price will react if it builds a higher low on the right side, how the liquid leaders are starting to shape up around their 21 day structure. It's always the same playbook, right? But when we get that VIX spike, when we get that credit spike, when we get that McClellan summation into oversold levels, when we get that McClellan oscillator into deep oversold level, then you're starting to stack up the clues into a potential setup, market setup, and you know that you need to flip your mindset into, okay, we might see some good momentum and sustain uptrend on the other side. Um, if that's the case, and you almost get into a mindset where we we could hold for multiple month moves, kind of a more in a position trading mindset. Obviously, if we go into a three leg down correction like in 2023, that's something that could happen. We can go into a bear market, and in which case the oversold bounce and the VIX and credit spread spike are faded, then that's another possibility. But you never know, right? You need to play the odds and don't wait for too much confirmation. That's why we use progressive exposure as well. If we, let's say that in your head you think that we're going into a bear market, right? Uh, and I know that happened with a lot of folks in April. I remember we started to take exposure. We were already up like 20 or 30% in our account. And on X, there was still that non belief that this trend was real and was gonna carry on for a few weeks and months. And they were waiting for too much information, too much confirmation, because they were locked in a bearish scenario or too defensive scenario, right? So I've learned the hard way that when you get that VIX credit spreads, breadth, and QQQE price, constructive price, and you get leaders setting up, you go for it. You use progressive exposure and see the traction and the feedback that you get. If it doesn't work, it doesn't work. Most of the time, anyway, that rally we engage early and we have time to take profit into strength, and we're stop at break even or some profits. If it doesn't work, it fell right away, then we know the new exposure risk that we take, and we accept that risk. But you need to go for it when it presents itself. If you wait for too much confirmation, it's too late. So that will be very important going forward. Right now, we are patient. We are defensive because we are in a clear downtrend, and we didn't see those spikes, those climatic action, that fear that often is needed to start a new uptrend. But when we get that, we need to execute, uh, and no matter if it works or not, that's not about certainty. That's about playing the odds, right? All right. So quick question from Pundit. Quick question about the 50-week high low by sector in TradersLab that you tweeted about earlier today. When we look, let's look into this. When we look at the data in TradersLab, is that for the S&P or NIS? because when you click the different index tab in it's only the cumulative. uh, I'm not sure to understand because you have those, you have all the sectors here in the TLMM dashboard, and you get the advanced decline, you get the new 50-week high and lows, and you don't have the cumulative, but you have the net on the home page. All right, this one. Okay. Oh yeah, okay. We only calculate for the cumulative for the markets. We don't have the cumulative for the sectors. That's correct. We don't have those charts yet. Well, you get the net. So the information in the sectors kind of cards here is the same information as you get here. So you get the highs, the lows, the net, and the net ratio. That's everything that you get. You don't have the cumulative. All right, guys. So what time is it? So 9:08. So okay, I don't like to do too big sessions, obviously, but it was asked last night if I could cover how I played and how we played the April's correction. And I know I covered that many, many times. So if you already heard that, you can go on. But I will try to explain for new folks, especially those that asked last night. So first of all, there was some, and I'll try to cover a bit before as well. So there was some big chop going into that downtrend and in that correction. And I remember to be pretty chopped up. So, and we have to remember as well where we started the year. So we started the year here. I remember that I had big push to start the year, early January. So indices were kind of chopping around. Oh yeah, okay. QQQE give a much better picture. So from here, I really had a nice easy push around. I don't remember. I think it was kind of 20-25% easy push. But then came, well, the infamous deep seek gap down right here. And I was really heavy into this, too much heavy. I think I was 150 or 170% on margin. I remember I was in Nvidia, in VRT, uh, in VRT 29, so 30% gap down. I was in CLS, and I had some cushion, right, in those names. That's not like I was drawing down 30% from my entry, right? I didn't enter at the top, but it was mostly from the 21 DMA structure pullback right here. Um, so yeah, I was in CLS, VRT, NVIDIA, um, I think GEV as well. No, not GV. But I was in some utility name. Oh, VST. I was in VST. Um, Another 28, 29% gap. So just to say a bit of the background with how I was into the April correction, right? Because it's important. So I had a very strong start of the year, then took that massive drawdown, and to be honest, that was the worst day of my trading career. I think I drew down almost 20% on one day. Uh, but all on the gap. Oh no, it was more 15%. Because I was 20% up, something like that, and drew down 15% because of that gap. And I closed a lot of exposure at the open, but the damage was done. So if I would have kept all my exposure until day end, I think I would have drawn on like 30 or 35%. Um, so only to say that I was basically back at square one, back in cash with basically break even or close to after that gap down. And I was not too inclined to be aggressive again, not too inclined to take big risk. And after that, that deep seek action was pretty choppy. Um, a bit better on QQQE, but we see on NQ. I'm just trying to remember a bit of the backdrop, but I remember that this period was very choppy. I think I tried again to kind of position into that market setup right here, but was quickly stopped out. So basically to say that I was quickly in cash, I think it was on this day right here, not even below the 25, 21 DMA structure. And after that, I was in cash, and I remember being in cash for a long time. Uh, and for me, that's the same. That's always the same thing. And that QQQE and 21 DMA structure rules, I had them in April, and they served me well, right? Because for all that, I was in cash. And trying to defend kind of my break-even year, and I think I was even a bit in the red. And then when I saw that rally into the declining 21 DMA structure, um, I remember that I played that a bit short with futures. Um, I covered pretty quickly, not even on the lows, but I think the day before. Uh, and that only kind of helped me a bit to go back to break even. That really didn't push easy much. And then the most important, how did we recognize the right side? So that's always the same thing, right? So we have that low here. And what came with that low, right? That was very important. We have that massive spike in credit spreads. We had that massive spike in the VIX in the 60. Um, okay, we'll talk about Bitcoin right after. Okay, so we know that we climaxed, there was a lot of negative sentiment, a lot of people puking their position, big VIX spike, big credit spread spike. So we knew that there was something going on, and we needed to start observe how the market was setting up, right? So first low was in. Then we had that massive news about, I remember I don't remember what, but it was kind of about the tariffs, right? Positive news, and we rallied into declining 21 day structure. And I remember staying in cash and fighting FOMO. I think I might have tested a few things by lack of discipline, but that was not the setup, and I was not looking to open exposure. I wanted to see the right side because that move was 15%. Uh, oh yeah, you're right. I had some individual short position. Dag, that's a good point. I have such a small memory. I don't mean that in a bad way, but I am very selective with my memory, and I didn't remember that. You're right. I opened some short exposure, I think in Apple and a few names, and that worked well. But I covered pretty quickly, and that was not long trades. But I was short Apple in this area. You're right. I remember now. Uh, but yeah, all that to say that you don't engage on a 15% up day, right? Into a declining 21 day structure. And I wanted to see that right side, which we had here. And from here, when we start to get that low, that rally into declining 21 day structure, right in that moment, right from here to here, uh, you want to observe what the liquid leaders, what the risk on assets are doing. And now let's flip to the names that we traded and that we observe by the by that time, and that gave us the clues that the market was really setting up. So look at the market, how the market tried to roll over, but when it made that higher low, look what Bitcoin was doing. So you have that higher low was on April 21, right? So if you go back, April 21, right here, just as the market was rolling over, you had Bitcoin breaking out from a tight range above the rising 21 DMA structure. So I know we executed that in April. And that was kind of one of my first position out of the correction. And when you see Bitcoin breaking out with the market trying to make a higher low, that's big information, right? Then we had the same thing with Palantir. So Palantir bottom with the market, reclaimed the 21 DMA structure, and when the market was actually rolling over, it was still making higher lows. And that April 21, when the market was building that higher low, we were also building that higher low in the rising 21 DMA structure. And I remember we executed that as well. Then you had Robinhood, same thing. As the market was rolling over, we reclaimed the 21 DMA structure. We had that back test into rising-ish 21 DMA structure. I didn't execute that because there was earnings too close, but I caught that entry right here just after earnings. So just to say that even the biggest market leader of the April's run really set up kind of 2 weeks after 3 weeks after the market bottom. So when I say that it doesn't mean anything to chase the bottom, it doesn't bring you performance. Uh, because the market will take time to set up. The big move will happen once the liquid leaders in the market reclaim their rising structure, backtest, and give tight entries. 1, 2, 3 weeks after, we don't know. But it's not worth it to chase or try to guess the bottom, because the market, when it will set up and start that new uptrend, especially after deep correction and deep oversold levels on the McClellan, then you have time to build exposure. You have time to be aggressive. It's not a race. So I hope that's clear, guys. And yeah, thank you, Dag. I remember now this this short that I made, and that's why I came up with those rules that I've put in my Git book recently, because I was shorting, but it fucked me a bit later on. I was not fully committed, and that's why I made those rules. Uh, and remember, guys, I'm still improving, I'm still evolving as well. And my Git book is my collection of rules and my collection of system. Uh, so sometimes when I don't like the way I trade during a market cycle, I'm coming up with new rules, and I place them in my Git book. That's my framework. That's my rules, my system, and that's the place where I explain those new rules. And shorting is one, right? Yeah, we're very happy to be on the sideline, and so many people are trying to guess the bottom right now. Uh, but remember how far and how long we could go, right? Um, Not saying that we have another April situation, but maybe we have another August situation. Maybe it's like April of last year, and we're kind of already done. But that's also always the same thing that we observe, right? If we bottom, we'll create a higher low, we'll have the 21 DMA structure reclaim, we'll have the back test to engage, and then we'll have the rally, the trend to play. There's no rush to guess right here if this is what we get, or trying right here if that's what we get, because sometimes that how it's playing out, and sometimes that's how it's playing out, and then you get stopped out, you just dig yourself into a bigger drawdown. um, and sometimes that's what you get. I'm not referring that we'll go into a bear market, but sometimes it is what it is. And pre-COVID, you can look at 2018 situation. Uh, we can go on for, I don't know, 64 days. That's like 2 months. That's a very typical correction, by the way. Nothing serious. And we're what? 6 days in? So get ready. Get your panda ready, because we're in a downtrend. We don't know where it will settle out, when it will stop. So Will it be next week? Will it be next month? Will it be in 2, 3 months? No idea, and I don't need to. But what I can guarantee you is that when it's done, we'll be there, we'll execute, and we'll kill the next uptrend. That's my guarantee. Not because I sell riches, just because we learn to recognize it and we prove time and time again that when the market is setting up and it start to trend, we have the system and the rules to keep us engaged and participate in it. It's not guesswork. It's not trying to guess that the bottom is in. It's simply that price and breadth will give us the exact signal that we want, and it never fails because it's not built in prediction. It's built um, on actual feedback. So when the signal is there, it means that the market is shaping up. We don't know if it will be an April rally with massive returns or a baby rally, which we can only push our EC 5-10%. But whatever we'll get, we'll take advantage of it. So Google and AVGO relatively calmer. Yeah, but I don't know. You get kind of a failed breakout on Google. AVGO is kind of very ugly. And to be honest, volatility that makes me think of some distribution base, something like that. But again, my friend, for me, market is first. So as long as QQQE is downtrending below a declining 21 day structure, I'm not even looking at individual setups. Not even looking. And I was looking uh, not yesterday, but well, yesterday morning and the prior night, simply because the market tried to make a low, tried to make some type of undercut and rally of that base. And like we discussed yesterday, we were in observation mode in case that the market was setting up. Then those high relative names around their 21 day structure were looking constructive. But with yesterday's action, it's now out of the equation. I'm not even looking, I'm not even tracking relative strength. When it's time, when we get into that right side and we're starting to retest and uh, get that right side of higher low and or reclaim, then TradersLab will point us directly to the right names to engage with the liquid leader scan and the liquid leaders pull back into the 21 day structure scan. So I don't even need to track it anymore. When it's time, when the market is setting up and it's time, and we get the signal from Brett as well, then I just open TradersLab and everything is there. So thank you, Watmoot. Thanks for the good feedback. I appreciate it. All right, guys. So market open. As I said at the start, I won't be uh, in office today. I will be on the road. So please be careful. I think it's also OPEX today. So be careful not opening exposure into the weekend if finding the bottom is your thing. And please go into the Alex journal. I wrote something about capital preservation last night or yesterday afternoon. And I think it's very important, right? You want to play the next rally with the least drawdown possible. If you get into a much deeper drawdown, it will get very, very hard to push into new high, uh, and 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 have the mental readiness to be aggressive and to really push your account. You want to be fresh. You want to have the smallest drawdown possible. Then it will allow yourself to be aggressive and fully capture the opportunity when the market really set up. All right. So have a good day, everyone. Have a good weekend, and let's talk again on Sunday night. All right. Have a good day. Cheers. Bye bye.